today I'd like to delve into a topic that has gained significant attention in recent years: the rise of Asean local currency bond market.
So I think for us, across the last few years, especially with the high interest rates environment, what we've been seeing or what we have actually encountered was obviously high interest rates. We have a lack of access to capital markets. So on our loan or our kind of debt profile, we've actually seen average tenors actually shortening.
In terms of refi risk, right? So around $80 billion of, there is upcoming refinancing of around $80 billion through calendar year 2026. Now, large part of this is still, the defaulted companies or companies that are in the CAA space, and large part of it, which is not in the CAA space, would still be in China.
Part of the supply is also driven by exactly what Charlene mentioned, right? Where the issuers want to tap the market, right? So obviously, last couple of years, a lot of them have gone to the bank market, which has been a source of funding. Given that some, the rates was too high and so on, we are actually seeing that shift now, and it's very much driven by the investor appetite. So investor appetite is there.
We are very focused on the cost of debt, but for us, the most important thing here is that when we are building our assets, we are building in a buffer in our equity returns.
China and US trade consists only, based on our estimates, consists only like 3 to 4% of China's GDP. So even if this figure continues to decrease, it won't have a substantial impact on China's economy.
On that part specifically, if you look at it, and understandably so, retail investors over the last couple of years have tended to move towards the shorter side of their allocation, more towards money market funds.
It's managing government bonds and corporate bonds. So I think the advantage for local investors, they would prefer not dealing with the currency volatility. One, if they do have to invest in US dollar bonds, the hedging cost is quite high. So in the end, if they can invest in Singapore dollar bonds locally, they would.
Through our indices that compares either Asia x Japan x China or like Asia x Japan, simply whether you x China or not, this year, if you include China, you will have boosted your performance.
Highly appreciate that you have invited not only the issuers, investors, in the intermediaries, and also guarantee companies like us to sit down together and look at the same issue from several aspects. So this is, I feel I benefited a lot from the discussion.
Thank you so much for inviting me for these forums, and I find this session to be very informative. And also, I think one thing is the speakers are very transparent and they are very upbeat on what's happening. At the same time, they talk about a lot about the fixed income market, as well as what the directions of the market going to be, especially after the Trump elections. I think I can get the direct expertise informations, in terms of the Chinese, especially and the Indian market, which is also the biggest market for Asia. So at the same time, I can also get the information on the technical side directly from the analysts. And I think with that, I think it can be very helpful for the market as well.